All right. Hello, everybody, and welcome to another week of our SelfWealth Live, the technical analysis edition here. My name is Roger, and I work for SelfWealth by Syfe, and this is Jason from Motion Trader. How are you today, Jace?
Hi, Rog. I'm good. Glad to be back on the show with so much going on. A lot of things to talk about today, no doubt. So, I'm good and looking forward to it all.
Yeah, the markets are starting to come off just a little bit over the last few days, but as we were discussing previous to the show, it's not entirely panic stations just yet, so it'll be good to chat about this very soon. We want to welcome everyone on the other side of the line here. Thanks for coming along once again to another great show that it will be, I'm sure. So the way it works here is we go through our three major markets from a price and a technical analysis perspective, price action perspective, reading the charts. All right, and we will go through the three major markets that are offered by SelfWealth, and that is the Australian market, the US markets, and the Hong Kong markets. If there's any general questions in there, we'll try and pop them in there somewhere for Jason. Most of the time, he's the one that's going to be answering the questions, and then he will also be doing the analysis of the viewer tickers that you put down below, and we'll try and get to one from every person. If we've got time, we can try and circle back, but we generally try and stick to the hour to an hour 15 on the show. All right, so that is my formalities out of the way, Jace. I'm looking forward to it. Once again, thanks for everyone on the other side of the line. Hello. Jace, let's have a look at that disclaimer, please.
Okay, so everything we do today, general commentary only, no personal advice. And I'll put up that disclaimer Rog just noted, and this just goes through all of that. I'm also not part of SelfWealth by Syfe. My business is Motion Trader, so my details are at the top. Licensing, general commentary, and all, and then beneath there, the SelfWealth disclaimer, same thing. Licensing, general commentary, and everything's in that little slide.
Beautiful. Thanks, Jace. Now, as we discussed pre to coming to the show, I'm not in panic stations myself just yet. It was a good bit of price action overnight, I feel, but we don't know where it's going to go from here. My only concern is that we are now trading over those underneath the moving averages we normally look at now. Do you want to give us your perspective, please?
Yeah, so let's get some charts up, and we can go through it all. So we'll start with the ASX 200. So yeah, this wasn't something I was expecting last week, and I was thinking maybe we were going to get like several weeks of consolidation above the moving averages, but instead we've got a sharp reversal from an all-time high to near probably about a 3.5 month low, and this is what markets will do at times. There'll be things that we just don't expect. We'll have times when there are strong rallies when we think prices might fall, and there'll be times when we get sell-offs when we think stability or rising prices are more likely. And this is exactly why having, at least why I think having a structured rules-based plan is just so important. And we talk about this all the time. You don't need to consistently predict what the market will do next, but you need to have a plan to respond when to whatever the market does. In this case, it's a sharp decline. I think your plan to help how you've handled the last couple of days, or I guess what you've done over the last couple of days, it does say a lot about like how your plan operates. And I think the key with that plan is it helps avoid emotional decision making. So the ASX 200, it was down as much as, so from that all-time high, yesterday's low, it was down as much as 8.5%. And so naturally that puts lots of people on edge. And a lot of people will now be fearing there's going to be a much larger crash. But I think rather than just be told the market's down in the nightly news and go, well, look, that seems like, it's on the headlines last night. It was the first story or two. It was like talking about all billions of dollars lost, etc. If you're just looking at that, it's really going to have you on edge. But I think rather than doing that, I think it's important to understand what some of the key sectors are doing, and then by doing that, we can bring some perspective to this situation we're currently experiencing. So first up, let's look at the materials index. And so this contains the big resource companies. Now, the materials have been down as much as 16% in the last week. So on the surface, that's a big fall, no doubt about it. But we need to keep that fall in context. It's not a 16% decline within an accelerating bear market. So for instance, it's not like a 16% fall in a market which is falling rapidly below declining moving averages. That's not the situation at the moment. It's look at this big upward period, upward phase we've had over just about the last year. So it's a fall within a rising trend. So that's something important to keep in context. It's a pullback from record highs after a strong bullish phase. And this is important. I think the underlying structure here remains bullish. So yes, a big fall, but the moving averages continue to rise and prices is currently above the 100-day moving average. So this currently isn't set up for a long-lasting decline. That's not to say the bullish trend can't break down. At some point, it invariably will. But at this stage, the bullish structure, it does remain intact. I think we should view this week's decline as a pullback within a rising trend, not the start of a new bear market. Just 2 weeks ago, we were talking about the possibility of more consolidation around the moving averages. So we're talking about how prices could come back to the 50 or maybe a bit lower and just chop around for a while. That's happening now. This is where prices are now. They're kind of where what we were saying a couple of weeks ago about that consolidation around the moving averages. What makes this so much harder is, though, that it didn't just continue to oscillate from where things were. We had this blast through to new all-time highs and then a steeper decline. So that makes, it's like the roller coaster, like going down, like up, and then you get the big dip down. It's a lot more, it's a lot more emotional when you get that rather than just continuing to track sideways. The important point is that this remains an uptrend. There could be several weeks or even months of choppy price action, but the trend here, it does remain intact at this point. Last week I said I wasn't in a hurry to buy, and it was just as prices were pulling back. I said, look, prices are stretched. I'm not in a hurry to buy, but I wasn't a panic seller either. And that remains the case now. I only sold one stock yesterday. Prices were, it was a pretty scary day yesterday, but my plan had me selling one stock. So it certainly wasn't, at least for me, a day of panic. It wasn't a day of pleasantness, but it wasn't a day of panic. I may exit more stocks in the next few days or the weeks ahead, but it'll only be when my plan says to sell. It won't be because there's a stampede of people wanting to sell. It'll be because the right reasons for selling are in place. For now, it's a case of, for me at least, it's a case of giving winning positions plenty of room to move with wide trailing stops and exiting or selling stocks which come back to that exit point. Coming over to the financials, the other big part of the local market, we've been discussing the likelihood of consolidation over the last few weeks, and that followed like the strong move from below the moving averages to above. We talked about the possibility of a pullback towards the averages. Well, that's what's been playing out. The key will be whether prices can now stabilize around the moving averages. We had the dip below yesterday, which has quickly bought back, and prices are now just above the moving averages. I think if this weakness persisted over the next few days or into next week or the week after, well, then it really does give back all of those gains, and then we start looking at the potential maybe for a big range developing. We could get a big sideways range in financials, for instance. But either way, we don't have a bearish structure in financials at this time. I think the approach here is that this remains a consolidation within an overall upward trend. The last component I want to show you, Rog, it's the equal weight, the ASX 200 on an equal weight basis, and this has been the cause for concern over the last several weeks, and we've spoken about how we've had this consolidation below moving averages, which have started to roll over. Yesterday's breakdown, it worsens the structure in the equal weight. Given what I've said about materials and financials, I don't think we should jump to the worst case scenario with the equal weight at this point. I think we need to monitor what the next rebound looks like. So we've had this. So we've had a fall from the all-time high, a shallow consolidation beneath the averages. We've had another sharp decline. What happens? What happens with this next decline? Is it shallow, where the moving averages continue to roll down? This would be a really vulnerable structure should that happen, and that would then open the potential for ongoing decline. So this is what I'd be concerned if I see this develop over the next couple of weeks, maybe. But then equally, could we get more of that, a V shape recovery, and then that changes the situation again. Like we've had these V-shaped recoveries in the past, so we don't know. We don't know what this is going to deliver yet. So it's a case of monitoring this closely and seeing how it develops. My approach here is to keep holding stocks in my portfolio where I've got profitable positions. I can some are at modest losses at the moment and maybe close to exits, but unless the exits hit, I'll continue to hold for now. And then having that plan to sell should stocks continue to break down. And as I said earlier, just I'm being slow to buy the dip until I see real concrete signs of the dip being strongly bought. So selling what's breaking down, holding what's profitable, giving it room to move, and being slow to buy stocks until we see a good buy the dip response.
Yeah, of course. There's some great analysis there and great perspective on all those components of the ASX 200, obviously. And I think the most important thing that I take out of all this is when I say panic stations, I probably used the wrong term there, because even with my portfolio, I had to exit a couple of stocks, or maybe three, over the last, not this week, but last week. And it's not about panicking. It's about sort of anticipating this change, and we've been looking at this over the last few weeks, and we're seeing that the equal weight was already starting to break down. Forgetting about what's happening in the world, because there is some terrible things happening in the world, but if we look at the markets, we're already starting to anticipate this change. And I was reading a book, and sometimes it's not about adapting to change, but anticipating change. And I think that's what we're doing a good job of here, Joe. You're doing a good job of showing our viewers and the people who are learning from this education is not to panic, but anticipate change. Stick to the plan, obviously, regardless of what happens. We talked about this last week. Are they knee-jerk reactions? Well, they might not be knee-jerk reactions, so you sort of got to stick to the plan either way, right? So, and anticipating this change.
Yeah, it's it's interesting. You said you sold a few stocks, sold 3 stocks last week. I've sold some stocks in the last few weeks as well. I've also bought some, but I think I probably sold more and raised a bit more cash in the last few weeks. And that's something we've been talking about, where we've had this cross current of same in the US, where you've got consolidations below declining moving averages. It does bring in, create an environment of heightened uncertainty. And so the response to that has been being slow to buy, exiting, not holding and hoping when something's not working. Just let's just get rid of it, shut down some risk, and then yesterday's I had lots of red in my portfolio yesterday, and it's just how it's going to be. We can't. Everyone wants to be out at the high and in at the low, but it doesn't work like that. If we want to try and stay on larger moves, you've got to be prepared to withstand some volatility. It's just comes with the landscape when you do this. And I keep coming back to having that structured plan. It's like you consider the ASX 200 from yesterday, and look where it opened, sold off early in the morning. So this is where it was. It was panic. There would have been, look, some people might have been operating on a plan. Things might have been hitting a predetermined stop, and they followed their plan. Other people just would have been responding to the falling prices and going, well, just get me out. And then they come in this morning and they've gotten out, and now prices are up here. So we don't know. Prices may, in the fullness of time, make their way back down to the low and lower still. But if we've got a plan, well, I think we're better at managing it. It's going to help us from just throwing everything out sometimes near the low and regretting it the next day. At least if we've got a plan, it's like, well, if it goes against me, well, I followed my plan, and if I know if I do that consistently over time, the odds are looking good for me. If I'm just getting flustered and FOMO buying, I don't want to miss out, so I buy up here, and I don't want to lose any money, so I'll sell down here. It's going to be tough.
Yeah, exactly. All right, let's check out those US markets, though. How are they reacting to it all?
Really interesting, the US. So the S&P 500's finally broken down from this tight range that it's been in over the last few months. In fact, it's actually broken down twice over the last few days. So once was last Tuesday. Like we can see the range. Here's our, just try and position this a bit. There's our range in there. We could even stretch it back a bit further. So we've had this range for the last few months, one of the tightest ranges the S&P 500 has experienced. And so breakdown last Tuesday, broke down on last Tuesday, and then rallied back, and then we've got another breakdown on Monday, and then of course it's rallied back again. So on both occasions we've got breakdowns followed quickly by snapback rallies. So both of these breakdowns put the S&P 500 in a vulnerable, probably a highly vulnerable position, but neither attracted follow through selling the next during the day, or in the case of last week, the following day. Prices have been able to rally. So I think these are both important buy the dip moments. When the S&P was vulnerable, it held and it rallied. So on both days, it closed up near its highs. Like look at the open from Monday, sold off to new lows. This is where it was right for that follow through selling, but instead it's closed up here on its highs. I think Monday's low. I think Monday's low is. I think this is now a key level. This is where the line really needs to hold. I think a retest and a close below Monday's low could potentially see a fast decline towards the November low at 6,500 and further. So if prices were to make their way back down, retest, and really see things give way. And this is why I say it's such. Why I think it's such an important low point. Similar story when you look at the Nasdaq. So just looking at the Nasdaq, sell off on Monday that marginally broke below last week's low, but from there it was a strong rally into the close. So we've got all this nervousness and people being on edge, but the market's opened low and it's closed near its highs. So again, I think Monday's low. I think this is now a key level, and then we've got the Magnificent Seven. So the big, those big seven tech stocks, Nvidia and Apple and the like. We've looked at this chart a bit over the last few weeks, and we've really now got this cluster of lows. So look at this cluster of lows, which is coming in around the mid-February low. Monday's price action marginally made a new low, but then again, it's closed up near its high for the day. I think the Mag 7, I think they remain vulnerable while they continue to consolidate below these declining moving averages. The moving averages have crossed; they're trending lower at this point. So I think it's very much a vulnerable position, but it hasn't. But they haven't decisively broken to the downside. And I think what happens just here in this little cluster, this tight consolidation range, I think this is critical. The risk is that we get a new low, and I think a new low on the Mag 7, then that could I think that could set off a cascading effect where we've got a decline and a rally, a decline, a rally, a decline, a rally, another decline sometimes sets off that cascading fall. That's the risk here. So far it's holding, so it hasn't broken down decisively yet. I think to disengage that risk, the Mag 7 really needs to put in a couple of strong days, reclaim the moving averages. Got to get prices back above the moving averages to disengage the vulnerability which is currently there. And just to stress, vulnerability doesn't mean a breakdown is going to happen. Things have been pretty emotional in some of these markets, but they've been holding the line so far. So this is why I say it's critical. If they can reclaim the averages, it really disengages a lot of that near-term vulnerability. Look, it's interesting, Rog. It would feel, I'll look at my own portfolio and how things have been over the last week. It'd feel a lot more comfortable sitting over with the bears. I see a lot of negative commentary about bad things are going to happen, and sitting with the bears would certainly feel more comfortable. Okay, let's just go and sell everything up. We'll just go sit with the bears and let this play out. And there's certainly plenty of points of concern. There's no doubt about this. Just what I talked about with the Mag 7, a breakdown could set off a cascading decline. So lots of points of concern. I'm still favouring overall, when we look at the ASX 200, we look at the S&P 500, I'm still favouring this as an unpleasant pullback within an overall upward trend. It's like, this is an overall upward trend at this point. It's not we don't have a bearish breakdown really in any of these markets. We've got volatility, but not a bearish breakdown. And I think this is an interesting point to quickly expand on, where I say I'd feel more comfortable sitting with the bears. In my experience, what's comfortable is often wrong. And that's probably because a lot of other people are positioned the same way. I think it's being uncomfortable that often proves to be right. Not always. Things certainly could break down and the bears will say, oh, it was just so obvious. But in my experience, it's those uncomfortable times that often prove right. And at the moment, I think holding the line, staying long, definitely feels uncomfortable. And I think it's that discomfort which is an indicator that I think holding the line at this point and sticking to my plan, having my exit levels, rather than just going out and dumping everything, I think that's the right thing to do.
Yeah, some good points there. Obviously, to see the lower lows established there on the Magnificent Seven there, certainly it is uncomfortable holding. I mean, I've got a few US stocks myself. As you say, you said it perfectly. It's so much more uncomfortable being on the bullish or the cautiously bullish side now than just sitting out on cash and getting rid of everything. So I can understand everyone's psychology if you're not following this form of technical analysis, right, or having a plan to stick with. But how's that? Is the Hong Kong also reacting the same then?
Now look at this, Rog. So look, I just draw up this point time here from where was this? This is July, August 2024. There's a 23% decline to the Mag 7.
Yeah.
That was uncomfortable. But the right thing to do was to stay bullish because we had rising moving averages and we only need a short dip below them. Look at last March and April. That was very uncomfortable. We all probably still remember that fairly vividly. It probably had disappeared from mind, although this one from 24 is probably completely, no one would remember what even caused that now. Although it would have been unpleasant at the time.
Yeah.
Sorry, Rog?
I don't remember what happened last year either. I remember the decline, but I just don't remember why. Anyway.
The tariffs.
Oh, that's right, exactly.
Tariffs was last year's fun and games around this time last year, and so keeps coming back to having that plan and sticking to it, even though sticking to it can be uncomfortable. So moving on to Asia, starting with the Hang Seng. Well, the Hang Seng has fallen further below the moving averages in the last week. Moving averages are starting to turn lower. I think the key now is, what does the next rally look like? Is it a shallow rebound, or is it a strong rally back above the moving averages? The shallow rally, as we've described earlier, that's a vulnerable, that would produce a vulnerable setup. But at this stage, I still favour that what we're seeing, that this whole period from October, I still favour this is part of an ongoing consolidation. But I think prices really need to stabilise and rally soon. Coming out of the Chinese market, structure here continues to worsen. with new lows below these declining moving averages. The moving averages have crossed. We've got new lows. We've got lower. We have a developing series of lower lows. But one positive is Monday's price action. So notice how prices broke to a new low briefly, and then rallied back and closed near their high. It'll take a lot more buying to disengage the immediate vulnerability of consolidations below declining moving averages. But I still think there's potential for this to resolve to the upside, but prices really need to get a firm foothold like right now and rally from current levels, disengage this series of lower lows with a push back above the moving averages. A break below Monday's low, it really does. It would really be a case of this market breaking down. So it's hanging in by, I think, by a thread at the moment.
All right, good wrap up of the three major markets we have at SelfWealth. Let's check out some tickers. It looks like so. No general questions for now. Let's just check out some tickers to start off with. And hi, Jen. Let's have a look at URNM, please. Uranium.
Okay, so there's a local listing and a US listing. Let's start with the US listing because it's more depth to the data than the local listing. And so it's a uranium ETF. It holds a number of uranium stocks. It holds a physical uranium ETF in it as well. So it's a really interesting way to get exposure to uranium. Structure here at the moment, it remains bullish. We've got this zigzag looking pullback to the moving averages. Looking at the price action on Monday, prices open lower, closed near their high, so they're starting to try and bounce from the 100-day moving average. I think the story with uranium remains bullish. When we look at the uranium price, we look at the uranium ETF. This feels at this point like it's another deep and unpleasant pullback, not dissimilar to like what we saw during October, November, December. Look, it almost could be a buy the dip environment, but in this current setting, I'd probably hesitate to do that. Let's see if it can get a nice rally off the moving average and then re-establish above the 50-day moving average. There could be an opportunity to buy this. At the moment, I've got some of this myself. It's a hold for me. And I think this developing trend remains intact.
Yeah, one of the things before we move on is I've always learned through you, Jace, is to look at price action that's going to develop over the next few days or weeks, right? Rather than looking at buy the dip right now, where it's a lot harder to put in an entry and manage risk, right? Waiting to see it develop and potentially turning around has been, I think, a forte for me. So I hope it's helped a lot of people over the years, right? But not just seeing one bar, like a low test bar or high pin bar, all these things, or bullish engulfing, or these kind of bars that happen. Can't see one here, but to see price action develop and just using that, over the space of time, and then putting an entry in based on that has really helped. And I don't know why but that's entered my memory there, as you say, there, Jace. So I think that's a really important part to see price action as a whole and not just one or 2 days trading, right? So.
Yeah. So look, just see here like a pullback, but then wait for the bounce, and then you got the shallow consolidation holding onto the gains. Yeah, there was another retest, but you could see there was interest in buying the dip. That's when we consider maybe this is the time to buy the dip. Similar sort of situation back over here. Yeah, it's now within that zone. But yeah, let's see whether we get a good reaction off it, and then maybe that could be there could be something there.
All right, fantastic. Let's look at the extractors. TLX, please.
This is a downtrend. It's not a stock I'd want to be in. It was a motion trader stock previously during 2024. We got a great uptrend in it, but then it came back and hit the trailing stop. probably during this period in April last year, probably during the tariff sell-off. I imagine this one hit its trailing stop and never gave another buy signal. So it's been a stock which has been off my radar for around a year. We often we do see stocks like this in many of these sessions, Rog, and I think this is why having that structured plan to sell is so important, so you don't get stuck in an ongoing decline. Not a stock I'd be looking to buy at this point, because is this just a rally back to declining moving averages like we saw in October? I don't want to buy a rally back to the moving averages, because the path of least resistance remains to the downside. We're in an environment where the rallies are being sold. You can see another rally back to the averages sold in November. Will this one be sold, and will we see new lows? If I had to have place a bet either way, I'd bet that would see below the February low before we see a rally to say 14. And simply because I don't know anything about the company or their situation, but that's just currently the path of least resistance. So my money goes on the incumbent trend, not in trying to forecast a change in trend. Wait for the structure to change, and then I get interested. For now, look, I just have to leave this one alone.
All right, thank you. Hi, Bob. Let's look at triple O.
So it's an interesting one. So Brent crude oil index, currency hedged. Currency hedged is an interesting play at the moment because we're seeing that Aussie dollar strength. Oh, this is a terrific. This is a terrific one. Nice work, Bob. This is great. Look, I've been discussing oil in my Friday strategy sessions, and we've been talking about the bullish structure developing since February. So the bullish structure has been developing well before missiles started firing and bombs started dropping, and that bullish structure has built into a strong breakout. I certainly wouldn't be buying any of this up here now. It's look, this would be the current price here now on Tuesday. Everything's fallen back. This is very much an event-driven situation with oil. It's not like we've got a demand breakout. We've got a conflict breakout, and conflict breakouts don't tend to lead to enduring rallies in the oil price. Look, if I'd bought some of this, I'm looking at this chart, wondering why I didn't go searching for ASX listed oil ETF like this. Look, I think I would have sold some yesterday because it was just such a spike higher. It's all we look at things in hindsight and we think what we could have done, but it's like conflict related, a spike higher, maybe reduce some position, hold a core position. Like, what to do with it now? It's like, I wouldn't be buying it, but maybe it's like I'd still be I probably would still continue to be holding it. I've got my exposure to the oil prices mostly through Woodside at this point. But yeah, look, Bob, that's a great one to bring up. I think too late to buy it now, but well done to anyone who's been on board.
All right, fantastic. We've already had a look. So extracted, it's one for now, one each to start off with, and if we have time, we can always circle back. So let's get on to KC Candot. Okay, KC, we'll say KC. We're looking at Canadian Stock Exchange, CFW. Start with one there. CFW.
Was that CFW?
Yeah, it's on the TSX.
Yeah, it's trading nicely. Like, this is not a bearish structure. We've got a lot of bearish concerns, but we don't have a bearish structure on this. Rising moving averages. It's an ongoing rally with a pullback to the 50-day moving average. Price action on Mondays. It's like there's no open, traded to the low and then closed near the high. There was certainly interest in buying of the dip. Not one I'd be too keen to come in and buy just yet, because it has had a big rally from below the average to above. Had this, it's up it's doubled thereabouts, and it's now consolidating. So like we could get a longer consolidation in it. That's a pretty messy sort of drawing this, the way it's doing a price action. It's just, I don't know why the bars and that are so messy, but nonetheless, we could get sort of like a period of sideways consolidation. You could get a rally, then another pullback and test of the moving averages. All sorts of ways it could play out. But I think the big gains are probably. I think there's a good chance the big gains are on hold for the moment, and it's coming into a period of consolidation. But if I had shares in this, I'd be happy to keep holding them, use a wide trailing stop below the 100-day moving average, and try and see off any potential consolidation. And if we do see a new base start to develop, maybe that sets up a new buying opportunity. But yeah, I think we've got time to watch and patience to hold if we're already in, especially if we're in from good levels when it first started breaking higher.
All right, thank you. Let's have a look at Roberto's NMG, please.
Yeah, it's at this stage. This is a consolidation within an upward trend. It's an interesting stock. It's a low price stock, and it's gone higher on fairly low volatility for such a low price stock. Look at all these consolidations. They're like these shallow consolidations into moving averages, and it steps higher. Another shallow consolidation steps higher. It's been behaving nicely. It shows like there's been this ongoing bid that's remained underneath the stock where those wanting to get set have continued to accumulate it on pullbacks. What we have here, we've got looks like at this stage like a zigzag type decline into the moving averages. There may be more consolidation to come with this. I talk about gold a lot in the Friday strategy session, and based around that, there could be more consolidation. But also this is one, because this is a low price stock, it can do its own thing. It may not correlate as well with the gold price as like something like a Northern Star or an Evolution, like a big gold company, which will really like gold's up. The big stocks tend to be up because they correlate quite well. Some of these smaller ones will do their own thing. At this point, it looks like the dip's being bought. If I had some, I'd be very happy holding it. Probably not buying it today. Just see how this continues to stabilize. But yeah, it's a nice looking trend.
All right, fantastic. Hi, Sydney. Let's have a look at KAR.
So this is an energy play, oil play.
Mm-hmm.
And so moving averages have turned higher and prices are above the moving averages. It's certainly got the potential to move higher from here. And if I had some, I'd be happy to hold it, see how this develops. I think the key is probably like staying above the moving averages now. Buying oil stocks at the moment, my hesitation with buying oil stocks now is that, as I said earlier, this is an event-driven move in the oil price. And if things settle down in the Middle East over the next few weeks, it's probably a good chance the oil price settles down as well. That's the concern, I think, with buying oil stocks at this point. That said, the structure here is supportive of a potential rally. If I was holding it, I'd be happy doing so. I could have my stop back below the moving averages. I'd be inclined to be cautious around buying oil stocks at this point. I'd be more confident buying them if we had a breakout that was seen to be based around maybe the Chinese economy starting to grow or some sort of demand-based reason starting to develop. I'm just hesitant moving in buying oil stocks based around a conflict. But yeah, look, it's a structure which could continue to evolve to the upside. Be a good one to keep watching.
All right, thank you. Hi, Lloyd. Let's look at PPC.
Yeah, I've got some of this one myself, and yeah, it continues to trend higher. Yeah, it's pulled back towards the moving averages, but we've seen this at other times, and it's stabilised and it's moved on. I'm happy to continue holding in my portfolio. Like, I went through my portfolio yesterday and I looked at, like, is there anything I should be selling? And this is one of the stocks in my portfolio which was down yesterday, and it's like, well, I don't have a reason to sell it. It's come back to rising moving averages. That's not a reason to sell a stock. It hasn't broken down. It's pulled back. I don't need to sell a pullback. I need to sell a breakdown or a hit of a trailing stop or something like that. And it hasn't done that. It still remains in an upward trend. Not a buyer at the moment. Not really a buyer of too much at all at the moment. But I'm a happy holder, and my trailing stop is look, it might be down around. It's a motion trader stop. I don't know what it is offhand, but I'm thinking it's probably look, it's probably down around the $1.70 sort of mark roughly. Happy to stay on this trend, giving it lots of room to move, see how it plays out.
All right, thank you. TLS, please, from Moa.
Was that TLS?
Yeah, that's right. Yep.
Yeah, look at this. Look how well it's seen off the volatility. This is anything but a bearish structure in Telstra. Like, if we're having a broad market breakdown, this is not what I'd be expecting. I'd be expecting Telstra to be declining below its averages. Maybe something like we saw in January, where you had that consolidation below the averages. There was some vulnerability to the structure, but we didn't get the follow through selling. Got back above the averages, re-established, and continues. It's remains a bullish trend. I'd be very happy to continue holding Telstra if it was in my portfolio. Not a buyer at the moment, but look, so far this is a shallow consolidation. Maybe it's got a little bit more to play out. Maybe it does come back and retest the 50-day moving average over the next few weeks. But I won't be surprised if we look at this in a couple of months and it's at new highs. I'd be staying on the trend, giving it lots of room to move. That's what's been working since it started to turn higher in what's that, mid to late 2024, and the trend remains intact.
Okay, fantastic. Next one is from Langel. Let's have a look at 4DX.
Yeah, trend still in place. A pretty big pullback there. Like, I don't know, would a wide trailing stop seen that off? It is a volatile stock. So, yeah, look, possibly, wide trailing stop would often be below the 100-day moving average. So if you're using a trailing 25% stop loss, this sort of pullback's gonna take you out. But if you're using an ATR based trailing stop, which is like using a stock's volatility and doing a multiple of its recent volatility, well, then you're going to be able to most likely see off this sort of pullback. The trailing stop typically comes in below the 100-day moving average. If I was on this, particularly from lower levels, I'd continue to be holding it. Yeah, the averages are still going up. It's still above the averages. I do wonder, though, given the sharpness of that recent decline, the fact that it wasn't a shallow pullback. It was a sharp pullback to the averages. Often, when you get that, it's a sign that there's more consolidation to come. And could we get this continue? Could we get this like drift back again to the averages and maybe form like a larger range over the coming months? It may not simply be a case that it goes down and then it goes straight back up. Not dissimilar to what we saw during late 25. There was an initial sell-off, then it rallied back, and then it sort of made its way back and retested the earlier lows. And it took a few months before it then started to rally. I wonder whether there's some more consolidation here, be it like a zigzag type fall or a ranging period. See how it plays out. So not a buyer, but a happy holder, but giving it lots of room because I think there could be more consolidation to come.
All right, thank you. Hi, Mick. He's given us big appreciation. Thank you. We appreciate you being here as well, Mick. CAA, please.
Now I've got some of this myself. Well, it's an interesting example again of why I use wide trailing stops. It's like, this sold off down to below $11 yesterday, and now here we are today, and it's trading at 12.37. Yeah, if you're a panicker on the early selling yesterday, you'd be probably looking back being a bit disappointed now. Um, the uptrend remains intact. It's not a strong upward trend. It's spent a lot of time like pulling back and getting below the moving averages. Like strong trends often stay above their averages. This one's sort of like it's making its way higher, but it's regularly coming back and retesting and dipping below the averages. This has really been a big ranging period since the December high, and it is really, I'd say this is still within a range. It's within this broad range, but even being within a range, like look at this period back here. It spent time in a range, then it broke higher from the range. I think the same sort of thing could happen here. That's the way I'm positioned. I'm positioned to give the uptrend every chance, and if it happens to go sideways for several more weeks or months, maybe it breaks higher later in the year. Well, great, I'm on board. If it pulls back and breaks below yesterday's low, it'll hit its trailing stop at some point. Well, then I'll jump out. But for now, I'm happy to stay in there. I do like that it sold off yesterday and came straight back up. That it was like that knee jerk panic, and there were buyers waiting below saying, "Thanks very much, take the shares." And now it's sitting higher. It's a good sign. I think it's a good sign when you see that sort of price action. You get a quick retrace of a sharp fall. I'm not hurrying to top up or anything, but happy to keep holding it.
All right, thank you. Let's look at CJBs, and that is a CSC, please.
I see.
SC.
That would be the copper stock, Capstone.
Yep.
So this has been a disappointing copper stock. It's like it was all doing well just at the start of Feb, and it's all just come down. Its fall's been exacerbated by the strength in the Aussie dollar. So if we look at let's have a look at it on its home exchange, Capstone Copper on the TSX. Yeah, look, it's still a big pullback. It hit a motion trader stop loss yesterday. I'm holding some of this myself in one of my portfolios. I haven't sold it yet. If it like I'm inclined to, because when I look at we look at say we look at like a copper ETF. So I'm going to show you an ETF which just tracks. I talk about this in the Friday strategy sessions all the time. So this is a copper ETF, holds a lot of stocks, including Capstone, I believe. And so its pullback has just been to the 100-day moving average and has rallied. So copper stocks generally remain in upward trends. Capstone, well, it's weakened below the average. So there's something company specific going on. Look, it's hit a motion trader stop, so it leaves the motion trader portfolio. I've got to consider whether I'm going to. It's not in my motion trader stock portfolio. If it was, I would have sold it. It's in a different portfolio where I tend to be more longer term holdings. If it can rebound from here, well then maybe it can sort of like stay in the game. The concern would be a shallow bounce and then a new low, in which case I'd probably just say, look, this one for whatever reason is not working. So I'd be careful with it. It's below the averages. The averages are turning down. It's not a buy the dip. It's it's possibly an exit depending on like how you why you're holding it, and as I say, for me, I've got different reasons for holding this one as more of a longer term. But even still, I'm not going to persist if it continues to break down.
All right, thank you. Hi, Astro. Let's have a look at AGL, please.
It's a pretty messy chart. Like it has broken higher, and the moving averages have turned. It's come back to the averages. I think it really needs to, like, probably say maybe there's going to be like some support around current levels. So you've got this structural support, like taking in a previous low and some highs, and that's all coinciding with where the moving average is now. So if it can hold around current levels, maybe it can like establish a platform to try and push higher from again. But we don't have an underlying trend. It's really just been traveling sideways for the last last 3 or so years. And this could at some point be an interesting situation because, you can see there's this big contracting range. If it can hold above that, maybe above that support, maybe several more weeks or months of consolidation, maybe you can then push to the upper end of the range and then maybe ultimately up and out of the range. So even though it's done nothing really of note for the last 3 or so years, ranges break, and when they break, they can lead to large non-going trends. So I wouldn't disregard a stock because it hasn't been doing much, because that can be the prelude to it doing a lot. But at the moment, it is in the middle of a range. So it's not one I'm in a hurry to move on. But if it does establish here and start to break higher, well, then it might put itself in play. A very interesting one, I think, to keep an eye on.
All right, thank you. This one's a good comment here, Jason. I know you asked SFR yesterday from MT yesterday. It's hard to let this one go.
Yeah, look, it's similar to what I was saying with Capstone, in that it's like this is difficult when you might have a strong longer term view on the copper price. The copper price hasn't broken down. The broader copper stock ETF hasn't broken down, but we do have volatility in stocks like Sandfire, which hit a motion trader stop loss yesterday, and Capstone. So what do? Do you fade the stop loss and say, oh well no, I'm going to continue holding it, or it's hit the stop, I'll get out. Like I've held Evolution Gold for over 15 years, I think. So it's been a lot of time. It's been under moving averages and downtrends, but it's just been a core position which has sat in a different portfolio, and it wasn't an actively traded portfolio. And I've just, that's how it's been. But then it's been in and out of my, like if it was in my motion trader portfolio, I'd exit it because it's like I'm working on a medium term basis, say 1 to 3 years. So you can hold stocks for different reasons. If someone's been holding Sandfire since way back when, well, maybe they're operating on a different strategy. If they bought it because it started to break higher in September 24 and they've used a wide trailing stop and it's got them this far, well then their plan around that is to look, maybe it is a 1 to 3 year time window and has hit a trailing stop, so maybe it does get moved on. So working out what you're holding a stock for, and where it fits within your broader range of holdings. Is it core long term? Is it strategic medium term? Try not to mix the two up. You don't want to get a medium term one and then move to long term because you just don't want to sell and you just put off selling. Understand why you're holding something. If this were in my motion trader portfolio, I'd be selling it, because that's what I do with my motion trader portfolio. I don't hold and hope. I might delay the sell decision for a week or two if I think there's going to be a good rebound, but I typically will end up exiting it. I certainly wouldn't be buying the dip at this point, but it's one of those ones where it's conflicting because we've got different things going on with the copper price and the copper ETF. Is this just volatility? And we end up, this is a spike low, and then it does recover and it consolidates for several months and it's at new highs. We don't know. The problem is when we don't sell and we just keep holding, that something else happens that becomes obvious in hindsight, and it's down at $7, and we're going, well, we should have just stuck to our plan. So got to be very careful when you're deciding, well, I'm just going to hold on. Because that's how we end up in some of those stocks we look at where they're down like 60, 70%. And we say, well, the way to avoid that is by having that plan to sell. So you've got to be very careful when you decide, okay, I'm going to disregard a stop and just hold it long term.
All right. Beautiful. And once again, you bring up a good point. If you've got some of these stocks that you find it hard, like I certainly still have a hold and hope portfolio, although I've cut a lot of the stragglers out a long time ago. Maybe that's what you've got to run to our side, and then have you actively trade a sort of motion trader style portfolio, which you're sticking to the rules, right? So
it's like, look, another option with the stock like this would be to say, look, was this just panic on the day? So I'll give it the benefit of the doubt, but if it breaks Monday's low, then I'm out. Breaks to a new low, well, line in the sand, enough's enough. I've just got to now move this one on. Or do I say, okay, look, I'm going to take the better price and sell it today? Different ways this can be done. But ultimately, you've got to keep in mind, what if I'm wrong? What if it continues to decline? How am I playing this? What's my ultimate line in the sand where I say enough's enough?
Yeah. Max, good to see. Yes, big drops were had by all yesterday. Good to see you still up for the year. That's good to hear. Sachin, let's have a look at GYG, please. They got good Mexican food.
Unfortunately, not a good trend, though. Steering very clear. It's there's been no reason to be in this for a good year or so. And look at this latest consolidation. It's a shallow bounce off the low. I think the odds favour this is making a new low in the coming weeks. Just giving this one a big miss. I don't think there's any upside in buying this now. I think it's all there's too much risk. The risk reward, it's not asymmetric in our favour, I don't think. Why try and pick the low? It's like picking the low here. Like, we could have said, was this the low, or was this the low? Was this the low? Was this the low? But they're all consolidations below declining moving averages. The incumbent trend is down until it flips to the good side of the averages, and that's probably not going to happen in just a couple of days.
All right, fantastic. Hi, Elizabeth. Let's have a look at AVR, please. V for Valerie.
Trying to establish above the moving averages. We don't have an established trend here at the moment. We've got a potential basing period with attempts to sort of get above the averages. So far, none of these attempts have been able to kick on. That doesn't mean it's not going to happen. If this was in my portfolio, like say I'd bought this breakout in late January, I'd continue holding it for now. My stop would have been nicely below the 100-day moving average. It's it didn't kick through then, but it's come back to the averages. It's still consolidating. I could give this some more time. It's well within the bounds of possibility that this is just another stepping stone towards the next breakout. I wouldn't buy it today, but if it starts to break above the March high, well, then maybe that could be an entry point. If we get some more consolidation and break above the March high, that could be a secondary entry point. If it starts back breaking down below the February lows, well, then maybe I'd be rethinking things. But at the moment, there's I think there's technical reason to justify holding it at this point.
All right, thank you. Next one is from Caroline. Let's look at YAL. YAL.
So it's a coal stock, and it's been doing quite well. been in this range. Been in a range for 4 years or so. Look to be starting to break to the top side on Monday. Pull back today. So because it's in this big 4-year range, whatever it may be, we don't have an active trend. We've got oscillation within the range. It's now looked like maybe it was trying to break through the top of the range yesterday, but it has come back. It's kind of like playing along with the oil price a bit. It's like an energy as an energy stock, so it's an oil substitute in a sense. Some things. If I'd bought it as it was like, look, if it was in my portfolio, I could just hold it for now and see whether is this the time it's going to break to the upside. If I with it pulling back today, I probably wouldn't be a buyer today. So it had, it was up near its highs yesterday, but it's come back a bit. This has recently been a motion trader signal, and there are signs of near-term momentum. It's just whether there's going to be that follow-through buying to be able to propel it out of the range, and we don't know yet. That's all tied in with what's going on in the oil price. I think there's certainly potential for this to be the momentum that takes it clear of the range. If it can hold on to these recent gains, if it can consolidate around current levels, hold on to these recent gains off the averages, it really does start to set up the potential for then a lasting break from the range. But let's just see, can it hold on to these recent gains, or does it start to slide back towards the middle of the range again? It's hard when we don't have that underlying momentum with the stock, and we're looking at it within a big range, because we don't know. Is it is it breaking down, or is the low going to hold? Is it breaking up, or is the high is going to hold? Here we are here now. We're up the top. We don't know whether it's going to make its way through or not. I'd be inclined to hold off it for the moment and see whether it can hold on to its recent gains. But it's certainly at an interesting stage.
All right, thank you. Next one's from Damien. CGF, please.
Yeah, it's how far it's just fallen. It's not a nice looking structure at all. It's like we had the consolidation below the moving averages, which was okay, and we had initially there was a sharp rally back. It's really just in the last couple of days where you can see a gap opens up on the chart. It's gapped lower. It hasn't really had a strong rebound today, but it had been in a nice trend. So it really is quite an abrupt shift in the last couple of weeks. I think the next rally will tell us a bit. If we get a strong rally like we saw back in February, it could be a case that there has been a notable exit from the stock, which has forced the price down. But a strong rally would show that the dip was being bought. There's still that underlying strong demand for the stock. That would be a sign that maybe this isn't part of an overall big trend change, but it's a big shakeout. Whereas if we got that shallow rally that really can't get much momentum and really can barely plug this gap which has just opened up, well, then it does open up the possibility that there's more downside in this. It's a tricky situation in terms of we're using a wide trailing stop. We got in at good levels earlier on, and we're using a wide stop. We could still be in this even with a wide stop. I'd be inclined to give it the benefit of the doubt. If I got in at good levels and I had a wide stop, I'd still stick with it. Wouldn't buy it here. It's just one of those harder ones. It's not clear cut to me what to do here. It's 21% from its highs, so that's within the bounds of giving it lots of room to move. But the structure doesn't look strong. So as part of a broader portfolio, I'd continue to hang on, but knowing where my exit point is. But it's not a dip I'd be buying.
All right, thank you. The next one is another gold one, EVN, please.
EVN,
Yep.
trend is still up. You can see the averages. It's just pulled back in between the 50 and the 100-day averages. It's a motion trader stock. We've got a wide trailing stop on it. If I've got this, but I've got it in a core portfolio, so I don't have not using the motion trader stop on it. If it were in my motion trader portfolio, I'd just be using the motion trader stop. I'm not a keen buyer of gold stocks at this point. I go through that in the weekly strategy session into detail why I'm not a keen buyer of gold stocks, but I've got plenty of gold exposure, which I'm happy to keep holding. And this is part of it. I'm happy to continue holding this stock. And but yeah, just not a buyer at the moment. Let's just see how this pullback plays out. But the trend very much does remain in place.
All right, thank you. Next one is from Stacked. So let's look at it's actually a US stock, so BKSY.
BKSY. It's really a bit range bound. It's you can just quickly map out the range. It's something like that. It's it's got a we can say it's got it's generally got a series of rising lows. It's got some rising highs. So it's got, you'd lean towards this saying it's got the characteristics of an emerging upward trend, but it's a messy trend in that, particularly at the moment where it's just oscillating either side of its averages. So that's typical of a range, and we can use the lines to help demonstrate that. When it has had some of these rallies, it rallies and then it can have some of these quite rallies and then has abrupt pullbacks, rallies and an abrupt pullback. So I think this has been a difficult stock. Probably not one I'd be like the price action from Monday was good, and that it's closed up near its highs. So it's really got to break from the range. It's got to break from the range to start to get some momentum. Probably not a stock for me at this point because it has been so erratic in the price action, but it does have some of those characteristics of a building trend. Like one strategy could be if someone was holding it now, maybe continue holding it. Maybe a stop could be below the February low, for instance, and starts to break below to the downside of the range. That could be a point to say, look, maybe this isn't working. But if it can hold that February low, well, then maybe we give the upside the benefit of the doubt. And if it can establish above the moving averages, break out of the range, it certainly has the potential to continue to push higher. There could be a lot of upside in it if it broke from the range and started to get some consistent momentum. So certainly a stock with prospects, but it's the timing around it is a bit tricky when it's in a range.
All right, thank you. Next one back to Australia, WDS, please.
So as I said earlier, I've got some of this myself. So Woodside's broken out of a range. Well, it broke out from a range a few weeks ago. We talked about this in the Friday strategy session. I brought this to attention of strategy session members as a potential opportunity in energy, and that breakout has worked nicely. Currently, a shallow pullback from the it's like we use the high from early March. It's like a shallow pullback. It's holding the gap high, as you can see where it's gapped higher, and it's holding using the top of that gap as support at the moment. Trading on its lows for the day, so it's going to be really we spoke about oil a little bit earlier on, that it's conflicts typically don't lead to sustainable trends in oil. But I'm happy to see where this move in Woodside goes. Probably wouldn't be a keen buyer at the moment. I'm happy being in from lower levels. If it were to make it all the way, make its way all the way back to near where I got in, and start to get back below moving averages, maybe I'd just say, look, this isn't really playing out, and I might, close it out for not much of a loss, or have a stop just back within the range. But for now, look, I'm happy to hold it. If it can hold on to these gains for several weeks, well, then it might set up a new platform for another run higher. That could be a potential entry point. But for now, I think it's a hold if it's in a portfolio. But I wouldn't be too keen to buy it just now.
All right, we'll just jump to one more Australian one before we finish off on a couple of US ones. So we'll just do GQG from Paul.
Well, we don't have a trend. We've got a potential change of trend, but it's not there yet. It's above the averages. The averages are just starting to cross. For me, it really needs to establish above the moving averages, and that means often that means you get this sideways motion. It holds onto the recent gains. The averages cross and start turning higher, and then from there you can get the secondary breakout. That's sort of where I'd be interested in saying, look, maybe this is a play. It's not quite there yet. If I was holding it, if I'd already bought it, like say I just bought it, I bought the break above these recent high points, and say, look, there's a breakout. Moving averages are just about crossed. It looks like it's breaking some highs. Yeah, look, if I'd done that, I could just have a stop back down here, maybe below the late February lows, back below the moving averages. That could be one way to do it. I guess, like if I was really keen, it could be bought. Maybe it could be bought at current levels and maybe a 16% stop or something on. But in the current environment, I just don't know that I'd want to be coming in and trying to buy a bullish breakout. I'd like to see it, hold its recent gains, hold above the moving averages, then start to break higher. It's certainly worth watching. There's certainly the potential of a trend to develop, but we're just in a bit of a fragile time where there's a lot going on. I don't think we need to put a whole lot of new risk on the table just yet.
All right. We'll finish off with a couple US here. CIIT, please. And NASCAR's got a question around how Ethereum and how a ticker can run 6,000% in about 6 minutes. We're not going to see any intraday charts on our end. Sorry, NASCAR, but maybe you can just give us a bit of a view of this one here, Joe.
Well, look, it's still below these moving averages. There's not a lot of data on it. It only goes back to early last year. It's had a couple of attempts to rally through the averages. It was looking interesting recently, but then it sold off again. Then it's had another strong run into the averages again. It's attracted selling. It's closed down near its low. It's not giving me enough to say, look, this is an emerging trend. It's got to get itself back above the moving averages. The moving averages have never been moved higher on this one. It's been a downtrend since listing. So, look, I'd leave this one alone. I need to see it above the averages, establish, and then start to move higher. I'd be happy to pay more. Look, really, but I'd be happy to pay twice as much as it currently is, just to sort of give myself a higher probability of success. Don't want to buy it below these declining moving averages because, what if it goes lower? Look, I think it's best left alone.
Yeah. All right. And we will finish off. We've looked at KVO, we've looked at WTI and oil a lot today. So we're going to finish off on this question here, which is I think it's good, relevant. I'm buying in America, looking to diversify. EWA, please, Jason. Now it's on the NASDAQ, I think. Is looking more stable. I'm seeing it as a hedge. What would Kramer do?
EWA. Well, EWA is just like an ASX 200 listed fund. It's still on ASX two. It looks better than the ASX 200 because we've got the currency component to it. If we bring it back to Aussie dollars, it's kind of like looking more like the ASX 200. Yeah, look. Yeah, look. There's an uptrend. There's an uptrend in this. It's supported by the currency, so you kind of like it's. I'm not sure what we're ultimately gained by buying the ASX 200 on the US exchange because yeah, this might do well, but then if the Aussie does well, you then got to convert your money. You sell it, you got to convert your money back into Aussie, so you give back some on the exchange rate. So why not just buy the ASX 200 locally? It's I don't see the advantage in buying it on the US exchange, but yeah, look, it's an interesting way to look at the ASX 200. That's not a downtrend, is it? So we don't currently have a bear market in the Australian index from this perspective.
Yeah, yeah. Obviously, always we've been talking a lot about the currency hedge and with the strong Australian dollar at the moment. It can be, I guess, a little bit different to look at these, and depending on where you're investing, to look at these charts, right? But I'm glad you looked at it from just as a trend versus putting that that currency perspective into play, right? So but as you said, Jason, I mean, I'm buying in America. I'm not sure whether you're actually buying in America or just in Australia buying in American stocks. Is it worth going into an American fund if you're just going to convert it back to Australia? Is the question, right? So
Yeah, I think if you're an Aussie investor and you look at the chart and go, this looks like a better chart of the ASX 200, you got to remember that ultimately your money is coming back to Australia. One would think so. Ultimately, that's what you're getting. It's the ASX 200 because the currency will get cancelled out. If you're an American and you go, I like this. Where's it gone? If you're an American, you're saying, well, I like this chart. Well, then it's a different game because you might also be betting on the Aussie dollar. You're in America, you say, look, the US dollar's weakening against the Aussie, so I want Aussie exposure. I like the Aussie market. I'm going to get the currency kick. Then it's a different story. But if you're an Aussie, it doesn't work the same because then this chart may continue to outperform the ASX 200 on a local listing, but then ultimately you sell it, and if the Aussie's gone from 70 cents to 80 cents, well then you get you give back then. So it's it depends what your base currency is really about how this plays out for you.
Yep, a lot to consider there, but thank you for your analysis there, Jason. We hope you've helped. Obviously, everything we talk about is general in nature, right? So we don't take into account any of your goals and personal goals, right? And ambitions, obviously, in the financial markets and what you do. But we obviously talk a lot about the planning of things and structures, and that's the thing that we try and educate people on as best as we can, right? So, but as always, thank you for coming along, everyone on the other side of the line. We really do appreciate it. Thanks, Jace. Thanks for your analysis.
Hey, thanks, Rog. Thanks, viewers, for joining us. Hopefully that's been interesting today. Certainly a lot to talk about, a lot going on. And we'll have another look at it next week.
Yeah, for sure. Don't forget to like and subscribe down the bottom and write down any comments if you want as well. Obviously, you can check out the links below, which there's one for Jason there, and he talks regularly about his strategy sessions, which you can just sign up to that below as well. And there's a link to the SelfWealth by Saif page there as well, which you can get some free trades if you're not a client yet. All right, so that'll do for this week. I hope everyone has a great week ahead. Thank you all, and we'll see you again next week at 12 o'clock on Tuesday, Australian Eastern Australia Daylight Savings Time still. Thanks, guys. Bye-bye.